Breaking news from one of the Wall Street's most foreseeing voices. Crescat Capital is warning of a tech bubble bigger than 2000, guys. Their January 2025 letter just dropped, and the data is shocking. Before we dive into their findings, let me tell you why Crescat's analysis matters so much. Since 1999, Crescat Capital has been consistently ahead of major market turns. Founded by Kevin Smith, they've built an impressive track record of spotting market imbalances before they become headlines, not after. With 3 hedge funds and 2 SMA strategies under management, they've proven their ability to deliver alpha through different market conditions, what is very important also. And right now they're seeing something that should concern every investor. The numbers they're showing us are startling. When we look at the Magnificent 7 tech stocks measured by enterprise value to GDP, they're showing a valuation that's more than double what we saw at the 2000 tech bubble peak. This isn't just another market cycle. We are in unprecedented territory. Let's put this in perspective. Back in 2000, we thought we'd seen the peak of market exuberance. The dot-com bubble had pushed valuations to what seemed like unsustainable levels. But today's situation makes that look modest in comparison. The concentration of wealth and market cap in just 7 companies has created a level of market risk that's truly unprecedented in financial history. The threats to these tech giants are coming from multiple directions. We're seeing fierce competition from United States startups backed by venture capital, something like free money. The rapid advancement of open source AI is threatening established business models. And perhaps most concerning, Chinese cyber warfare poses a serious threat to the high margin operations these companies rely on. Let's zoom in on Nvidia for a moment, the darling of the AI stock boom. 2 major threats have emerged that could reshape its future. First, there is China's open source DeepSeek R1, which is making waves in the AI community, huge waves. But even more impressive is what's happening right here in the United States. A company called Cerebras has created something extraordinary, a chip with 200,000 AI-optimized cores and 4 trillion transistors. Can you imagine? To put that in perspective, it's 56 times larger than Nvidia's best GPUs. This isn't just competition, it's a potential game changer in this industry. Now, here's where things get really interesting. The Trump administration's economic team, led by Treasury Secretary Scott Bessent, has been developing a comprehensive plan that could fundamentally reshape the global financial system. They're talking about a new Bretton Woods, accord on currency and trade, potentially incorporating gold back into the monetary system in some form. This isn't just policy tinkering, it's a complete reimagining of the global financial architecture, guys. And the problems Crescat is identifying go far beyond just tech stocks. They're seeing critical imbalances throughout the global economy. We're facing unsustainable interest costs on the United States debt, which could lead to the steepest decline in the pro-growth fiscal spendings we've seen in 40 years. Because we need to solve this problem somehow. Our trade relationships are creating serious problems, destroying good-paying middle-class jobs, and leaving us dangerously dependent on foreign supply chains. Meanwhile, high inflation continues to squeeze lower and middle-income populations, and we're chronically underinvesting in the precious and base metals we need for technological advancement. Now Trump asking them from the Ukraine. But here's what's particularly concerning, the global liquidity situation. Central bank assets have contracted to their lowest level in over 4 years, largely due to the strength of the dollar. This is creating a squeeze that's being felt worldwide. As Crescat points out, no other major economy, not Japan, Canada, Eurozone, the United Kingdom, or Australia, faces the same challenges as the United States, which needs to maintain nearly 5% GDP growth just to service its debt. Crazy. The triggers for market corrections could come from several directions. The emergence of China's DeepSeek could burst the United States tech bubble, and we're seeing echoes of 1929 in the current trade tensions, just like the smooth Hawley tariff triggered the 1922 crash. Today's headlines about Trump's widening trade war are raising similar concerns. And then there is the liquidity situation. Jay Powell's interest rate hikes starting to bite as COVID-era debt needs refinancing. And the Fed's reverse repo facility is running dry. And what makes this situation particularly precarious is the timing. As we enter 2025, we are seeing a perfect storm of factors. Technological disruption, geopolitical tensions, monetary policy challenges, and extreme market valuations all converging at once. Historical parallels are striking, but the scale of potential disruption could be even larger than previous market corrections. It's their opinion, by the way. So how is Crescat positioning for these risks? Their largest position is in their activist metals portfolio, which they've built carefully over 4 years with guidance from experienced geologists. They're focusing on undervalued gold and silver miners, believing this could provide significant upside in a tech sell-off. They've also taken short positions through put options on the S&P 500 and Nasdaq, along with targeted positions in specific mega-cap tech stocks. Their strategy seems to be paying off. In January 2025, they saw strong returns from their publicly traded activist metals positions and successful short positions in Nvidia, Apple, and Microsoft. These gains were only slightly offset by small losses in their Canadian dollar exposure. This performance suggests their thesis about market imbalances is starting to play out already. Looking at the broader picture, what Crescat is highlighting isn't just a market correction, it's potentially a fundamental reshaping of the global economic order, with the United States dollar's role as the global reserve currency being challenged. Traditional safe havens like gold gaining new relevance, and technological monopolies facing unprecedented threats. We could be witnessing the early stage of a major market transformation. As Crescat warns in their letter, competition from United States VC-funded startups, creative destruction from open-source AI innovation itself, and Chinese state-sponsored cyber warfare all threaten the high-margin monopolistic business models of the United States tech giants. This isn't about creating panic, it's about being prepared for what's coming, maybe. Crescat's track record of identifying major market turns makes their current warning particularly significant. Their unique combination of macro analysis and deep value investing offers us a valuable perspective on both the risks and opportunities in today's market. Thank you for watching me freezing here, everyone. If you found this analysis helpful, make sure to like and subscribe for more in-depth market insights. And let me know in the comments what you think about Crescat warning. And are we really in a bigger bubble than 2000? Share your thoughts below, and you can see my results as a portfolio manager here. Thank you for watching, see you in the next videos.